Hi guys, hope you all are doing well and had a fantastic day and the week that went by, right? Eventful week with ups and downs. But before we start, uh, here is a disclaimer, right? Anything and everything that we'll be sharing in here is purely for educational purposes only, right? This by no means directly or indirectly recommends any trades that you might want to take, right? Excellent. So with that said, I was just reflecting back on what we had discussed, right? This was, the last analysis that we did saying, bullish about 26308 in the last but one analysis, and we said C could come down south to complete it. And then in the last analysis, we said this is going to be a make or break zone because it retraced exactly at the 61.8% retracement, right? But this came a bit deeper, and then with today's RBI updates, there was some positive reaction by the market, right? Which is one, the RBI cutting 25 bps rate, and then the liquidity moves, which is the 1 trillion in the open market orders, and then 5 billion 3-year USDINR buy sell swap, right? So that's a very positive news, and the market turned things around, right? Because if you recall, in the last analysis, we spoke about price turning bearish, right? We had this three candle, and three black crows is what we call this pattern as, right? And then there was this pause, and then boom, up, right? So this is SGX, but Nifty is no different, right? We had this three candle pause and then boom boom, right? Primarily driven by the RBI policy that we had earlier today, right? So looking at the volumes, nothing significant, right? This looks like something which is pretty normal, but there is a pattern, right? Which is the three candles in here, and then the three candles in here, almost four in here taken out by a green candle, right? At least these three candles have been now engulfed, right? Even if I ignore the this one in here, these three candles have been engulfed, and Nifty has closed above all these three candles, right? It has engulfed it. A similar pattern in here, right? Lethargic down move and then boom. So this is a whipsaw that is kind of trapping, right? Because price turns bearish. We also saw the divergence at some point of time, which was convincingly telling that things are going to correct, right? But today's RBI meet has turned the situation around, right? So with this, is this time to be bullish, right? Should we start buying the dip? Is something let's dive deep into in this working session. So let's get into it, right? It's going to be a long one, and watch till the end to understand the plan from here on, right? So the week is over now. So if I look at the weekly candle in here, this is a strong bullish candle, right? And let me also add the volume to see how is that responding, right? Not significant. While the price is continuing to go up, the volume is not very convincing, right, in terms of supporting that volume. But hey, this is the new norm, because ever since Jane Street left, the market has changed its personality, both in terms of the movements and the patterns, and also the strength or the momentum for the intraday markets, right? So this volume, while there is a divergence, one cannot, I cannot completely rely on it, right? But looking at this in here, right, this is the all-time high. Let me add the magnet and put it right in here, right? This is the all-time high, and that was the all-time high which it touched, and it continues to drag, and this is the all-time high close, right? So Nifty has managed to close at all-time high. This was the previous week, which I think still remains as a record for the all-time high close, and it's marginally below that. So price on weekly continues to be bullish, right? Is there any lack of momentum? Doesn't look like it, right? Look at RSI. It's at 64 and still trading about the moving average, the red line that you see there, right? So RSI is also indicating strength, right? No divergence as yet. Yes, there was this divergence that we saw from here, um, right? While prices are doing higher high, RSI has not gone as high as in here, right? Here it is, RSI is at 76, and here we are at around 64. There is a mild weakness in RSI, right? But that doesn't conclude anything, because there's no clarity or a clear divergence, and most importantly, price has not confirmed it, right? So for any divergence to be valid, we absolutely need price to confirm it. Otherwise, it's not a valid divergence, right? So weekly is clearly bullish. Daily has turned bullish, right? Clearly, and then the RSI story is pretty similar. Also on the daily, it is trying to cross the 14 days average red line that you see there. So yeah, thanks to RBI today, which drove the market. It would have been nice if it was a larger candle than this. Also, the folks who are using the smart money concepts or block orders, right? This is clearly a buy that we had in here, and today it kind of retested in here. It didn't even come and test the low somewhere in uh, before that, and boom, a bounce, right? So daily has turned bullish clearly, and hourly, right? Look at that. Friday today 9:15 first candle, and then the second candle in here at around 10:15 after the RBI meet is when things turned around, right? And for the students, if you recall, this is what we discussed it on Thursday, right? If it breaks this, we could do a C up, right? This is exactly what we were discussing. In that, I was super bearish below this, right? We'll get to that in the possibility when we speak about the Elliott wave. But this is the possibility that we discussed earlier this Thursday with the students, right? Now the big question is, price is clearly bullish, right? There's absolutely no second thought there, right? In all multi-time frame analysis that we're doing, based on price, as long as we don't break this, right? This could be a large, range bound market, right? A trend or a clear, strong trend will only emerge if we break 26319, which takes us back to this analysis that we did, right? Which is 26308 is the level that we were looking at, which I think was at that point of time somewhere in here, right? This triangle that we're looking at, um, which was in here, right? 26308. Where is it? 308. That was this one, right? So that level still remains as is, right? So with what we analyzed last week, yeah, this was the one. It still remains as is, right? So there's no change to what we had analyzed, during the week earlier, right? This was, I think, the last weekend analysis that we did on a larger time frame, and then dip, and then continuing to be bullish. So 26308 level pretty much remains as is, right? So price is clearly bullish. Let's look at options data. um, there you go. Change in OI clearly, more puts than calls. That's 4.38 crores of puts written, and not a lot of call unwinding for the whole day. So there you go. Net, there has been a bit of unwinding at 26,000, 26,100, and then build up in 26,200, right? Like I always say, the area of significance is more important, right? And we don't believe in PCR. I still see some comments around PCR, so get out of it, right? So 26,200 is a support, and they've got a pyramid, right? 26,000 all the way up to 26,200. Some aggressive, put writing, and call unwinding, short covering, which combination drew the markets up. Um, Open interest, overall open interest, 26,200 is a resistance, still a resistance, right? 26,100 is a support, and 26,000 is a Bahubali support. I think 26,000 has been the level that it has been whipsawing for quite some time, right? In the last 3 to 4 weeks, we saw 26,000 being a support, and then it became resistance, then it's becoming a support. So things are turning around because we are at that crucial juncture where Nifty is trying to break its all-time high, right, which is in this area, right, and it's continuing to get the support, or is able to sustain in that area. But 26,000 is a level that I recall has been changing very swiftly or rapidly, right? Because that's hey, what the game is all about, right? Let's see if this can sustain in here, right? But looking at the overall open interest, this is more even Stevens, and 26,200 seems to be the resistance. And beginning of the month, we'll have to see how this data evolves for the rest of December and how the year closes, right? Which reminds me, I think it's good to see the monthly. This is something that we saw last time, right? All-time high monthly close, and it continues to be trading above it, right? So a strong weekly close, because if you recall, as on yesterday, or the last analysis that we did, we were talking about this being a very important, right? Also with the students this Thursday. So it clearly respected that, and things are clearly bullish, right? Now, moving on to Elliott wave, this is where I have to I want you to absolutely pay attention, because there are multiple possibilities evolving, right? If you haven't watched the long-term analysis, please go and watch it. I think you can search with the name Nifty 30,700, and or look at the playlist, and you'll figure out what we're talking about, right? So this is the channel that we spoke about that continues to remain on, right? And we said we could do this, and one dip in here would be nice to have, right? So overall, at a larger picture, wave 5 is on, right? There's absolutely no doubt in there, because it's always real good to relook at the possibility, and then start with a clean board, right? So this is what we were looking at, and then this is on the monthly, coming back to weekly and dissecting wave 5. So this is what we had, right? We were looking at this entire move as two possibilities, right? Let me make this a bit better in here and come and touch. There you go, right? This looks a bit better with this fake breakout. I think, I'm sure this was also an event that happened on 7th of April. Don't recall what it was, but I remember we analyzing this candle, and then it could be a fake breakdown and a trap, and that's precisely what happened. So looking at this bounce from here, right, students, pay attention, because this is a good learning opportunity for you, right? So we had looked at two possibilities. One, and nothing new, because we discussed it, right? 3, 4, and 5 unfolding. This is, what one of the possibilities that we looked at, because this was an expanded triangle that we looked at, right? And we said this is one possibility. The other possibility is this entire move from here to here is A, B, and then, we are unfolding C up in here, right? Let me make these numbers a little bit bigger, a higher degree. It could be too small. Super cycle, and then A, B to a super cycle, right? So these were the two possibilities that we had, and both seems to be open, right? Um, the big question is, which one am I more inclined towards? I think, with what price is telling us, I'm more inclined towards this as an A, B as a triangle, and then C as an impulsive wave that is evolving, because that's what price is telling us. And there's the divergence that we saw has now been invalidated, right? Because if you recall, we spoke about this divergence in here clearly when the prices were confirming, right? But it could not sustain, and today the prices have turned bullish, so this divergence has been invalidated, right? So if I'm more inclined towards wave C, clearly this has to be an impulsive wave. And how am I looking at this is this, right? Pay attention. 1, 2, 3, 4, and 5, right? At a lower degree, making it as a wave 1, and a 5 is a truncated 5, right? Which makes this as wave 1, right? And then we're talking about wave 2 in here. Let me make this to 22, 24, right? And make this as wave 1. This is wave 2, right? Remember, we're looking at bullish possibility for now as an ABC, right? ABC or an impulsive, we're still looking at the bullish possibility, right? And here wave 2 has retraced up to 50%, which is great, right? Now from here, this is the possibility that I'm more inclined towards. Let me get it to a 75 minutes chart, right? Now here we were looking at this. This is wave 2, right? This is wave 1, 2. At some point we were looking at this as 3, 4, and 5, right? Now pay attention, right? This is what I was talking earlier. We were looking at this as an impulsive wave or a leading diagonal, right? Now, while this is a diagonal, clearly, look at this retracement in here. This is where things are getting very interesting. It is trading above 0.618, right? With that said, now the possibility that I'm inclined towards is, can this be a flat? Make sense? And do comment, students, what is it that wave C can be, right? And if this is an ABC, breaking this 5 high, which is 26,245, is going to unfold wave 3, which is a super bullish run, right? Now to look at the bounce from here, let's look at how much it has retraced. Wave 2 has retraced to 50%. This was a classic irregular flat with fake breakdown capturing liquidity, and it came down right to 38% approximately, which is okay because wave 2 retraced 50%, and now wave 3, 2 of 3 can be a shallow retracement. There is absolutely no second thought, right? So super bullish above. Now the question here is, one is view, right? The other one is the ability to trade. And let's get into a 15 minutes chart. Now here is where the things are getting trickier, because if I look at the retracement from this top in here, at some point of time I was expecting a rejection at this golden fib to go down. That did not happen, right? Now if I add RSI to it, look at that. There was a bit of divergence in 15 minutes, not only but also in this area, right? You see that the other smaller divergence in here, and then we got that dip. Now there are two possibilities that can happen here. One, this can be wave 1, this can be wave 1, this can be wave 2, this can be wave 1 in a smaller degree, and this can be wave 2 in a larger degree, right? This is one of the possibilities. And or this can also be an ABC, which is this becoming an A, B, and C. Both are open, right? So if we get a dip down south in here, we are going to unfold a larger C, right? Because what we had this as a C, this could be an A, B, and then C. That's the possibility that I would open to, right? Pay attention, because Elliott wave is subjective and price is above everything, and it has to tell us what it's wanting to do, right? So this is one possibility, and the other possibility is super millennium. And if we do this, which is a boom gap up, right? Because then it becomes wave 3, and the retracements are going to be extremely shallow, right? So Monday's price is going to be very, very important, right? But these are the two possibilities clearly that I will be inclined towards, right? Am I super bullish? No. Did I carry any positions? No, because today's move, remember, was driven by the RBI event, right? Which also reminds me that we haven't looked at the FII data, which is insignificant because you know the story, right? We've stopped doing that for a long time because options data digests everything, into it. But if we look at the FII data, I mean, this is yesterday's data, right? So do run this through and apply the same approach that we're doing in here, right? FIIs have been, bearish for a very long time, right? Because as far as you can go, which is, November 4th, you see that, right, on futures minus 1.35 lakhs. And then, index options, they're negative, right? Net around 4.6 lakhs, not only on 4th November, but if you keep moving, um, right, look at that, there's no positivity, right? The numbers are fluctuating, right, at 1.68 lakhs, 1.34, a combination of options and futures, they've been net negative, right? But can I the question is, can I conclude based out of this data? The answer is absolutely no, right? Because this data is not truly reflecting the change of the trend during the market and can be used as a bird's eye view to understand the position, right? Remember, these are open cards, and I was telling exactly, the other day this week, that if your cards are open, especially the big guys, they wouldn't, play this game, right? FI data is available for everyone, and one cannot blindly use this data because I keep saying, data is one thing. But how deep their pocket is another, right? Remember, options data is derived from the futures, right? Future is the derivative of the options premiums, and then futures are then further derived from stock, right? That is why we call them derivatives. And at the end of the day, while they may have a position, they should also have deep pockets to move the options premium and the futures by playing in the cash market, right? So that's one thing. The second thing is, clients historically have been, we all have been looking at it as retailers, right? But things have evolved since then, right? Clients are not retailers anymore because look at, the put options sold 4.92 lakhs. Neither the FIs nor the pros have, that, deep pocket to be able to sell that many puts, right? Look at this. While they have sold 4.92 lakh puts on 3rd December, look at FIs have bought 2.91 lakhs, right? Which is irrelevant. But looking at today or as on yesterday, look at that, right? No different. FIs are short 1.23 lakhs. The clients whom we used to consider it as retailers have sold 4.98 lakhs. Yesterday they sold 5,000 more puts, and the markets went up, right? So the big question here that is open for me is, who is moving the market, really moving the market? Is it the FIs or are the clients, right? And honestly, I don't know because data is interpreting one thing, but the markets are doing another. So I've stopped looking at the FI data in detail. While it's good to understand what the positioning is, but not use it in isolation as a conclusion, saying, hey, FIs are bearish, the markets will be bearish. That's not the approach that I would be looking at, right? So pay attention to it. I think it was important for me to highlight this because it came as a discussion earlier this week, right? Yeah, so look at this and keep an eye on the data later when it is available, and see how things have changed, right? I wouldn't be surprised if FIs did a bit of short covering today. um, you know, uh, Short covering in the sense reduced their future index positions, and also the options data, right? Both future and options. So that's that. So we covered both. I think this is going to be an important level, 26 to 45, to make or break, and or also this can be a diagonal, right? Something that I would be definitely keeping it open, right? because multiple possibilities are opening up, and I can tell you the um, market is trapping, right? When you conclude it to be bearish, and here suddenly we get the RBI event, and you know this event driven moves are not sustainable, right? So something that we'll have to keep an eye on, to watch how the big guys are reacting to it, right? Because we don't want to be on the wrong side of the market and get trapped, right? And for all, market knows already, it digests things ahead of the event, what may or may not come, and any reactions on the event news is always risky, and it is better to wait for things to settle down, right? That's the approach I'm going to take, but I'm having all these three possibilities open, right? So taking a step back, price is bullish, options data is bullish, Elliott wave unless and until 26,245 is taken out, I would not be bullish, right? And then here, breaking this low in here is going to be super bearish, right? This is something that we've already looked at, right? So that's the Nifty story, guys, and let's quickly run through Bank Nifty. I mean, USDINR is rocket high, and I'm glad RBI came up with the USDINR swap budget allocation of $5 trillion, because otherwise this is going to touch the roof, right? At least what the story is, and one may argue, right, it's good or bad, but for the overall economy, we don't want this to be there, right? And clearly Nifty IT is reacting to the US dollar, because that's one index that loves dollars to go up, right? The big question is, can it sustain, right? Nifty IT, what I was looking at in here, right, we analyzed it, a dedicated one, this has to be taken out, right? Otherwise, any weakness or strength in the dollars, US Nifty IT can go down south. And then I keep saying we've not considered AI completely in Nifty IT. I think we are in that rejection mode on what AI can do for now, right? We're not accepting the reality on the AI world and the impact that it can bring through, right? So that's Nifty. Bank Nifty is looking like this in here, right? So looking at monthly, we analyzed it last week. Let me delete everything. Monthly is bullish, while we've got a long way to go. Weekly is much more bullish than Nifty. Let me add volumes to it. Okay, that's good volume, and relatively better than Nifty. Bank Nifty is clearly outperforming. Closing continues to close at all-time high. There is no resistance up. We got that rejection down south, and then strong recovery, 25 bps cut. So price is clearly bullish, right? And on the hourly, let's look at this, right? On Bank Nifty, I'm not going to mark the overall long term, right? We looked at this as an ABC, which looked very different on Nifty, and then this becomes an ABC. The big question is, if this is an ABC, minute and then minute, is this a larger ABC evolving, right? This can be an A, B, and C down south. This is, definitely a possibility that would be open, because I'm not convincingly bullish, right? If I look at the bounce from in here, A is clearly looking as a 5 wave, and then we got support at 78.6. So yeah, this can still be a 1-2-1-2, just like how we saw at Nifty. Let's add the RSI to it. No divergence. Price is bullish. So yeah, this can also be a 1-2-1-2. Exactly what we saw there, right? 1, 2, and then lower degree 1, and then lower degree 2, right? This can also be a diagonal that we looked at on the Nifty, right? So pretty tricky. We've been doing whipsaw, price turning bullish, bearish, but this is typical consolidation, right? I'm keeping my position size small, and because when I go wrong, you're able to manage that risk. I would continue to do so, because that's when you're able to mitigate that situation on a whipsaw like this, and save your capital, right? That's how I would be looking at in this market. So yeah, that is all I had. And looking at Bank Nifty open interest, let's quickly run that through. Look at that. Change in OI 60,000 is, just like we had 26,000, 60,000 has been the level that Bank Nifty is playing around with, right? Um, Very, very important level. While the volumes are insignificant, open interest is supported 59,500. 60,000 is a support. So Bank Nifty options data is more supporting this C down south, right? And for all we could have Nifty also doing the C down south to complete an ABC in here and then resume the trend, right? So keeping both the possibilities open on Monday, Tuesday, I think this is a very good plan for the rest of the week in terms of how the price is reacting in the coming days. If it comes and gets a support here, this wedge is possible. If it breaks down, I would be looking at this. Otherwise, if it breaks 26 to 45, I would cautiously be bullish. Let me change this, right? Because I know this could be misunderstood. And if you're following, everything and everything, anything we're doing is all cautiously, right? So yeah, keep an eye on that. Guys, that is all I had. If you like what we do hit the like button, and absolutely looking forward to the comment and your views, because that matters to us. And have a great rest of the weekend. And yeah, cheers. Bye now.